Welcome to episode 3 of the NGMI podcast. Crypto is confusing, so I launched this show to help break it down and make it a little bit more understandable for the everyday listener, as well as someone who might have been in the industry for quite a while. Now, the major benefit of this show is that I get to speak to people who know a lot more about this subject material than myself. And hopefully, in the process, I get to pass on some useful information to you guys. Today, I'm speaking with Mark Monfort. He's the co-founder of a crypto venture studio called Not Centralized, as well as the co-founder of the Australian DeFi Association. Mark has recently branched out to focus more specifically on the field of AI. However, he remains extremely knowledgeable on all things crypto and blockchain tech. In this episode, we talk about the key trends emerging in the crypto sector heading into 2024, the potential for harmonious integration between blockchain and AI, how quantum computing could decimate Bitcoin and the entire world of online security, the role of zero-knowledge proofs in protecting data online, the cryptocurrencies that Mark expects to stick around for the long run, and more. Without further delay, today's guest, Mark Monfort. Wait, and we're live. How are you, man?
Good, man. Good to be live. This is exciting.
Yeah. Welcome to episode 3. Thank you for coming
I can't
on.
believe it. It's freaking crazy. I've seen the first 2. You're doing so well so far, and I say so far not in an ominous way, but like I know that there's big things coming. But having done stuff like this, it's not easy. So well done on getting everything set up. I've got. For folks that don't know, there's questions here. It's all prepared. We're running off Riverside, like proper stuff here, folks.
Guys, you know it's premium when they've written questions beforehand. So, speaking of questions, I think we'll just jump straight in.
Yep.
I am really curious as to the trends that you see emerging in the crypto industry right now. And again, this obviously doesn't have to be linked to tokens. I'm not asking you to shill your bags unless you want to. But it is more of a question around the new applications, protocols that are being drummed up this year that might bring something novel, something of value to the industry.
Yeah, absolutely. I mean, over the holidays, a lot of people were pretty privy to seeing all of these great crypto outlook reports, whether it was from folks like Messari or Crypto.com, Swissborg, The Block, PwC were in there. You know, you had folks like Pantera Capital, Nansen, Van Eck, who do the ETF, a whole heap of folks. And we crunched, I was going to say, normally I'd say crunch the numbers, but I used to work in data, but it's more words now. So, doing all the
Crunch
AI
the
stuff
words.
as well. Crunch the words, and what the words say, the common themes across the thousands of pages of reports were tech developments. That was a big thing. So the rise of DEXs was really a big kind of push over centralized ones. So that was like a really key theme from all of those reports. And just that ability to have secure kind of data solutions when it comes to how AI could play a part in a lot of this, a lot of the blockchain decentralized stuff. So there was a lot of talk about that, as well as like macro kind of factors. So people talking about, the upcoming, at the time it was upcoming and now we've got it. So we're dealing in the aftermath, but the BTC ETF, so Bitcoin ETF, the much anticipated, a lot of fanfare, then disappointment and stuff now that some people have had, but just zoom out and you've got like a better outlook. But the Federal Reserve interest rate changes, how that's going to impact the market, supply and demand kind of factors as well, and just like the Bitcoin halving event. So a lot of talk about that. Regulatory stuff was definitely on the cards, both here and overseas, and definitely closer to home in Australia. There was a lot of the talk around what regulations would be and how that would look for the average punter, and people were, speculating. But the fact of the matter is that we've got regulation being planned, at least an initial kind of consultation paper on regulating digital asset providers. So the platforms that are in that space would be exchanges. It'd be anyone that has any kind of custody. We were lucky enough as the Australian DeFi Association and Not Centralised being a builder, and I wear both kind of hats there. From the association side, we were able to bring developers to a roundtable run by the Commonwealth Treasury, the people that are actually looking to make the laws, that talked about what are the concerns that builders might have. So they talked to the lawyers around the regulation. They talked to consumer action groups around how it affects consumers, and they talked to the exchanges as well. But what has not really happened in the past with laws has been really talking to developers and that part of the industry. So it was really good to participate in that. And I guess the key thing is if you're going to fall into the regulatory perimeter where regs capture you, it's to do when you're basically handling, if there's at any point that you've got control of people's assets, even if it's a little bit. If you've got this chance at control, you might call yourself decentralized and whatnot. But if you've got at some point access and control of people's funds, then you definitely have to think about licensing. That they haven't got any laws out yet, but that's certainly top of mind there. So regulatory stuff really interesting, and then just the innovation and use cases. We're starting to see some really interesting things, and I guess we'll get to a little bit of that later in the show. But around real world asset tokenization, still a hot topic. A lot of mainstream folks coming into that space. Not naming any specific kind of projects there. It's still kind of early days in that part of the world. But because the hot topic has been AI, the interesting thing I think for, I guess, degens in this space has been that blockchain is actually far more useful than people think. A lot of folks wanted to discard it, but I think the trend that we're seeing is that seeing blockchain used as part of AI solutions. So AI helps everything, but I think that other way around, like where blockchain secures and helps power AI solutions, is going to be really spoken about a lot more this year. So a lot of great outlooks. And like I said, we used AI to read through, the 1,000 pages of reports, but just at a very high level, those are some of the things that are there.
Okay. No, I'm really curious as to how you see, because I consider myself being in like the decel camp of AI. I'm very
Okay.
like there's
Don't
a
run too
lot going on there. Exactly.
Mm-hmm.
No, I get on with a lot of like the accelerationist guys. Like
Yeah.
I really do. I think there's a lot there, but I find that myself temperamentally, I sit more on like the
Mm.
decel. And so for those listening, it's decel would be those that consider themselves like, no more AI progression, please. And
Mm-hmm.
the effective accelerationists, the E/ACC thing that
Mm-hmm.
you'll see on Twitter if you're terminally online, like me, is kind of the guys that follow the lead of who's the bald guy, A16Z,
Andreessen. Mark
Andreessen.
Yeah.
And so they kind of follow his
Yeah.
tenets of like, go, 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 go. It should be pushed to its utmost limits. So
Dude,
I
it's
am curious as to how you see
yeah.
blockchain complementing AI and vice versa, if there's any interrelationship there. Because I think that's an underrated narrative. And I feel like
Yeah.
it's fallen off since ChatGPT went away. Everyone's kind of forgotten that AI is still not forgotten, but I feel like that it slipped out of the mainstream. So
Yeah,
love to hear your
exactly.
thoughts.
It's going through redefinitions, and it's funny. Like you mentioned the EAC and the the DAC, the decelerationist and stuff. But it's like it's pronouns for tech people is kind of what it is. And I'm okay with whoever wants to have their thing. Like I'm not hurt by all of that kind of stuff. My narrative is that I'm kind of centralist. I see both sides and I want to understand both sides of an argument and decide my own pathway. But more often than not, history has shown us that the truth kind of falls somewhere in the middle. And it's not that I'm trying to find the truth or we're trying to find the truth with these things. I just mean that the thing that really pushes society forward is not necessarily the ones that want to be on one side of an extreme. And we've got these two ends of the extremities. And I even argued in that sense, the people that want to slow things down, I don't see that kind of working. But I don't think it's like some people want to slow things down, but that's not the one definition for it all. Like someone like you that might want to slow things down for pragmatic reasons.
Caveat, I don't want to slow things down. I just don't want to, I just don't
Well,
mind.
yeah.
Yeah.
Well,
I look at limiting progress as a bad idea, markets wise. I'm just like, why would you get in? Like, let's not try and, if you're starting to say like, hey, let's put government regulations on how much people can innovate, I think that's terrible.
That's too much, right?
I agree.
So I think that's the thing. It's this spectrum where I've spoken with people on the EAC side and said that, look, I'm not fully there because I don't want to accelerate it and, do innovation at all costs. I think innovation is going to happen and you want to learn about it and you want to play a part in it. But if you accelerate at all costs, you do what Web 2 did, and it's just scrape everything and not give any, of the rightful rewards to the owners of the people that created the things that we're now, utilizing. So I don't want that, but I also don't want us to slow down. And I definitely, like I said, I don't think that anyone is really, although there might be, I don't think that anyone is really extremely one or extremely the other. We're all a spectrum. But the funny thing is that on the EAC side, when you say that you want to be more pragmatic, they're like, well, immediately that's not EAC. That's not effective accelerationism and stuff. And it's just like, how does that kind of work, right? I believe that you can push and we'll have the evangelists for these sides, but in reality, it's not going to work that way. Like, you would be criminal almost if you were doing everything to just push technology at the sake of humanity. And so I feel like the good thing about coming from Web3, and I know a lot of tech bros got or crypto bros were made fun of a little bit. And, it's funny. I laugh at myself. I laugh at everything, right? Going into going into AI from Web3, the funny thing was like, oh, they're just going on the latest kind of hype trend. But in actual fact, I think that's people had no choice and people don't even realize they're doing it. But if you're going in from a blockchain perspective, you will look at any other technology in terms of how do you decentralize it? How do you loosen the grip of control of power from the centralists and whatnot? And it's not just that, but it's the risks that come from just having all of this in one spot. I love open source, for example, because within the AI space, if you do open source things, it's easier to share, it's easier to get testing done. I know that there is arguments that a private kind of institution like OpenAI will have better models, but that is a race that open source is catching up with, may get overtaken, but it will be a continual thing. But I certainly believe in the power that both of these techs can bring together. So if we think about how does AI help, that's the easy one. AI helps everything. In terms of anything that you're doing where it's manual, it's intensive, you've got to read a lot of things. I just showed you an example. I read an example. I can't read all of those thousands of pages. Like, I'm a late diagnosed dyslexic, right? My eyes jump all over the page. I had to repeat so much stuff to just be good at it. I'm a trained accountant. I had so much problems with like words, numbers was my thing. But with at least like ChatGPT tools early on and what we built at Not Centralized, where it's a more private version of a ChatGPT, it's like business friendly. I can do things with these GPT models that just make my life so much faster. I can respond to proposals. I can do so much more. I can analyze things from angles that I wouldn't have thought of because I'm harnessing the power of human thought that's been there before that these models have been trained on. Because humans, like it or not, we're pattern machines. Like, we see things like if your mate buys a red buggy, a June bug car or something, or a Tesla, you're going to notice Teslas all around because we are really good at pattern matching. And when you think about how AI has been trained to mimic humans, for good or for worse, it follows and it strengthens what humans are about. If you offer AI money, for example, you offer ChatGPT more money, you're going to get higher quality responses, just like you would a human. If someone offered you, Tom, like, write me a story for $1,000 versus write you a story for $10,000, you're going to have a much higher quality response for the high amount of money. Not that you're giving GPT this thing, but if you tell it, it's going to think that. And then people are like, wow, this behavior is crazy. It's like, well, it is, but this is human. The interesting thing is how blockchain goes the other way. And the really cool thing is that when you think about what is blockchain good for, blockchain and crypto have had this kind of like nice, interesting kind of tug of war thing when it comes to the collective mindset. A lot of people that might be your friends or family, they think of, you talk about blockchain, they think of crypto, and it's like there's the technology underneath it, which is more back-end kind of software. It's not glorified. It is when people go, well, I can just use a database. Yeah, this is a better database, right? It's a better way to decentralize your storage. Blockchains have not been hacked. It's the front ends, it's the people, it's the things that are on the outside, but a blockchain network has yet to be really hacked, or it's still very proven that the technology is strong. And some of the earliest things that have been done have been just having blockchains as the place where you can have the data stored so that you can have immutability when it comes to auditing both the inputs and the outputs of an AI model. Going beyond that, a couple of things that you can do is, let's take a few scenarios, for example, royalties. Micropayments are not really easy to do and set up in the real world. However, with blockchain, we can have these micropayments going to the people that create articles, that create podcasts, that create artworks and content like that, such that they're rewarded at a very low cost effort. That's something that's just been natural with blockchain. Another thing that you can do there is that, take the case of OpenAI, New York Times suing OpenAI for web scraping their content. Now, imagine in the future that you've got web crawlers. Web crawlers will go to a website and there's rules on a website. So you look up something called the robots.txt file, which has instructions there of what can and cannot be done on that website. So it will look up something called like bot GPT. I forget what the common thing is from OpenAI and these other scrapers when they're scraping like websites. This thing will say in robots.txt if it's allowed or not. If it doesn't have it listed there, then you can scrape it because they're not protecting for that. But imagine in future there's smart contracts where you have an arrangement. OpenAI has an arrangement with a group ruled by a smart contract. That smart contract says, yes, you're on the list, you've been paying your bills, you can scrape. And it's just as, I mean, that's a very simplistic point of view, but I can see something like that happening. And then finally, in the future, when your doctor, your financial advisor, your lawyer, and people of in roles of services where you need humans involved, either because it's legislated or it's just a good requirement to have human oversight. How do you know when I'm doing something with AI and you know it's AI that a human has read over this thing? So we developed something, and I'm sure we'll see more of it, but when you have the outputs from our tool, and because we're working in healthcare and finance and other places, you can actually click to have a microsignature. A microsignature would be a ZK proof that attests, like a digital attestation, that I, Mark, have read the output, that yes, I'm using, I've tweaked, I've done something with it, such that if I have to get audited for something that I did, a report, a piece of advice or whatever, I can point back to the tool and say that, yeah, I've got that. That's what was the output of the AI from all of the things that it did, but I read over it. I'm still the human in the loop. So that proof of human thing, I think, blockchain can play a part there. Why it's a ZK proof and not just you put it on a blockchain as a record is because there might be things where a ZK, I don't want to send my data just to prove something. It might be that you could query, whether I did this at a certain date, blah, blah, blah. And I can just send you a true or false. ZK proofs are a great unlock. I didn't mention that in the outlooks, but we should be seeing a lot more of that. And the funny thing is, you don't need blockchain for ZKs. So guess what? We can see ZK proofs and that kind of tech in just traditional systems. But as you and I know, blockchain being decentralized, there's better ways to have certain systems of record keeping because it's decentralized. So there's a bit on how AI helps blockchain, how blockchain helps AI. And, being involved in communities like we are on both sides, like blockchain and AI, we're seeing some really interesting things coming from the community meetups, the hackathons, and various events that are coming up this year.
Okay, awesome. I do see like one of the primary concerns that I see with AI is particularly to do with artists, creators, essentially being unsure where their content is coming through. If it's been trained on it, how likely do you think it is that blockchain could actually be utilized to help verify some of that information? Because I feel like it's almost a little too late to stuff that in now and be like, hey, well, blockchain fixes this. And as much as I do think that blockchain has utility in certain aspects, I feel like unless you're putting data, like kind of segmenting it on blockchains now that it can then point back to and say, this is this person's yada, yada, yada. And it's like everything on the internet up until a few years ago existed entirely outside of a blockchain.
Yeah.
How likely do you see that as like becoming more of a standard norm so that blockchain could potentially verify creator content on the internet and prevent some of those crossovers there?
A couple of things there. So in terms of that, being able to say, for example, just in the AI space, watermark is something that they've been trying to do and still doing, like digital watermarks in images that you cannot see to the naked eye, but it is there digitally. That's been done, and some are still pushing that out as like this is just part and parcel of what we do. Whether it's, I can't remember if Samsung's doing that, or maybe one of the other new AI tools is going to be doing that, just part and parcel with what they do. It was more experimental, and now it's kind of going into production. That's great, but research papers have shown that you can get around it. You can either remove the watermarks, and maybe it's not so easy. You have to be a tech head and know what to do. But usually with tech, those things are made easier such that it becomes an app. So, you could see the influx of that. But the point is if you can get rid of that watermark, it's hardly a protection. The other bad thing is that if that watermark is to prove that something is made out of AI, then people have shown that you can create false positives, which is in some ways even worse. Imagine you're an artist and you created something and then someone throws a watermark on that and goes, well, no, not really. Look at this. I've got this proof that it's actually a digital thing made by AI rather than you. The false positives will be a bad thing as well. Interestingly, what I think is hopefully going to happen is this merger of the things that we mentioned before, where if people are going to be, if AI tools are going to be ethical, and I say if because it's, humans, that we're the fault in the loop. We're the ones, like the AI is just doing its thing, but the humans are the ones that actually really create these things that are good or bad with it. But I can see a situation where an ethical type of AI, and let's say it's an art creation kind of tool like Leonardo or Midjourney or DALL-E, from OpenAI, that what they potentially do is they create something and have a way of systematically having tagged all of these different things that are in its training. And if those things end up getting used in whatever shape or form as part of outputs, and maybe it's not done on a per output basis of the new creation or some way of just measuring it, then attributing royalties to how much your stuff is being used. Because if I ask for something that is Mozart-like, and then there's the people that create Mozart paintings or paintings of that style or artwork of that style, maybe it's such a broad, blunt object that all it can do is just group everyone into that, and I get a divisor of that. It's like everyone winning the lottery, so I get cents on the dollar rather than specifically knowing it was my artwork that was part of that. Whatever it is, as long as there's some sort of attribution there, and let's just say that ethical ones are doing that and they're paying people royalties for contributing, and you're encouraging contribution, I can see a situation there where we have a divide just like we've seen and we talk about in the DeFi versus TradFi space, where with DeFi, we eventually, a lot of us want to see regulation in the space for good reasons, like good regulation from good countries, like, that aren't doing things to steal from, whole nother episode. But let's just say that it's like a Spotify kind of moment. Spotify was around after the Pirate Bay came around. We had Napster, Kazaa, all those cool LimeWire and all that. I don't know how old you are, but I'm old enough.
I remember. There you
go. Tom
I just scraped in at the end of LimeWire. Managed to, yeah.
Perfect. You were a 2-year-old, but you scraped in. No, but that stuff is, so not that stuff, but like Pirate Bay is still around, right? Like people can choose to, and I know people, and I'm not going to name them, but as still using the Pirate Bay. But you've got Spotify. Spotify democratized things. They cut their deals. They got regulated. Now, arguably, they really favored the user rather than the actual artists. There's not much reward for them. So I think there's better ways that a Spotify type moment could happen. But if you think about DeFi, in DeFi, we're going to have that future of regulated DeFi. And I'm sure there's going to be unregulated DeFi and people doing shady things and stuff. But you choose to do that. It's based on your risk profile. The point is that you have a choice. And sure, you choose to go down that path, and there may be things that go after you, but that's your choice. You should have that. And I see that as hopefully a way that we can see with artists. And going back to the AI thing, we can have more ethical AI. And it's the cat's out the bag. You're going to have models out there that people can just download and do things without attributing royalties and stuff. But hopefully we see more of the good, because, they probably should have done some protections in there and cut deals with and done it the right way. But arguably, there's maybe a good thing to what they've done, because now everyone is jumping into the space. It's kind of like, the way that I got into Web3 was arguably through things that were very Ponzi-nomic. I didn't know it at the time, and I was trying to make sense of it. I'm doing data analytics and economic kind of theory in terms of gaming, guilds and like how those things work, and then going, how does this actually make sense? Why is it making money? Oh, after a while,
Oh, wait a second.
I get it. I get it. Like if I invite two of my friends and they invite two of their friends and they invite two of their Egyptian comedian friends, then you've got like a big pyramid sitting somewhere in wherever. So, man, it's crazy. But I want to see good being done, and I'm just saying that blockchain teaches us better systems than we had before, where we could distribute information, we can distribute basically monetary rewards and incentives better. Like I was listening to Bankless the other day. I don't know if you saw this, but they had Brian Armstrong and his co-founder from something called Research Hub, and it's in the DeFi space. So a problem in science is that incentives are really poor because you're incentivized to produce good results. You don't produce your negative results. And they had something where it used to be around 40% of research showcased, years ago, 20 years ago, negative results, because that's important to moving the space forward, right? But now it's only like 20% because people don't want to publish that, because the reward incentives just aren't there to publish things that were negative, even though that'll move the space forward. So they're trying to change that. So I just, you take blockchain thoughts and core tenets to many of these different things that we're doing right now, and you can build better incentive structures. And I hope that you can do that with, we can all do that with AI.
Okay. I'm not sure how much of your wheelhouse is still to do with DeFi.
It's a good question.
But I am. How much of your wheelhouse is still to do with DeFi?
When you run out of time, you build yourself more time. And I do have to say that I think that this year we're doing more in the DeFi space, especially as Oz DeFi. We're committed to running 40 events this year across 4 major cities. So Brisbane, Perth, Melbourne, Sydney to start off with. We've got chapters in Newcastle, Canberra. We've even got folks in Adelaide, and Jason down there is doing great things with Simon and a few others. But we are committed to those 4 major cities, at least, to doing 10 events this year. And so I'm scrambling to get those underway. So in a way, this is our biggest year, even though there's been all this noise about AI. I think it's been necessary. It's been great that not great in a way that we've cleared out the noise and the mess from we had the DeFi summer, and then all this crap happened overseas and a little bit here. People lost money, and it's unfortunate. But with the investment side of things, don't put in more than you're willing to lose, diversify, and all that kind of stuff. Hard lessons were learned, and hopefully we see some recovery of that with the whole FTX thing and whatnot. But in terms of work, there's a lot more mainstream stuff happening in the blockchain space. So the movements, I believe, really happen when you have banks, financial institutions, other corporates adopting telecoms, for example, adopting blockchain technologies as part of what they do, seeing more events, bringing new people in. We were really lucky to have at each event, we'd do a hands up and see who's new to the space. And we'd always get a good number of people, like sometimes 20, 30% that were new to the meetup. So even though we had good numbers, like 60, 70, 80 at each event, we were still getting new people coming into this space and others rotating in and out that were more of the regulars. So DeFi is still a big part of what we do. And even like I said, with the AI stuff, we're bringing blockchain into it. We're very lucky at Not Centralised being this part of the Australian blockchain ecosystem with some of the projects that we've done and we can talk about. We're really lucky we started off from that, because we bring that philosophy into the other emerging tech like AI. And eventually, when we're all talking in a year's time or so about quantum, or maybe it's a year's time, but it's like a year, but it's really 10 years from now, but we've gone back in time because quantum will open up like a wormhole and we'll all be like Back to the Future. But whatever it is, quantum is coming, so to speak. I just believe that...
What do you mean by quantum?
Quantum computing. So there's companies, Australia is really great at it. There's some great companies. Sydney has the quantum terminal. There's companies like, I'm going to butcher some of the names and stuff here, or actually not even remember. So don't worry about being butchered, folks. It's not even there in my head. But I've met some companies that are doing stuff, and they're trying to get quantum computing to do analysis. So to doing economic analysis, to doing markets analysis, to doing medical analysis. Because imagine that instead of things taking time like they do with traditional computing, even with these really fast NVIDIA GPUs, it's still this process of it's in order. It's not all done at the same time. Or if you want to do that, you have a really expensive hardware and software costs running multiple GPUs doing the same tests at the same time. But with quantum, it's still expensive, but you've got these things where it can run far more types of tests and scenarios, and you get to answers a lot faster. I feel like, and look, I'm going to be really, it's probably not a question you can do, but imagine you can go, okay, well, if Bankless and folks like these others are talking about fast, like how crypto fast, fast tracks, or it's not, it really speed runs history and testing of things. Imagine you can do that at a far greater scale. Yeah, crypto did things in like years that took hundreds and decades of years and stuff. Well, maybe quantum does it in a few minutes. So that's another kind of scary thing. But yeah.
Speaking of scary things, the only thing I'm not up to scratch on quantum computing at all, and I'm not going to pretend to be, but
yeah,
the one thing that I do remember kind of coming across was the danger of quantum with blockchain, in the sense, and it was one of the big like doomer arguments out there. That was like, once quantum computing becomes sophisticated enough, technically it could hack a blockchain, and that was like that's when Bitcoin will end argument. Do you think that's plausible?
Yeah, but at the same time, the counter is that it does that to everything. So no more HTTPS. So go bye to internet security. What's the point of any electronic device anymore? Because everything is just hackable. It's not just blockchain. It's the same kind of argument that people have when they go, well, how do you deal with your electronic funny money when the power goes out? Well, how do you deal with normal banking when the power goes out, buddy? It's the same kind of thing. The world is run electronically, and especially here in Australia, I could get that argument in really cash-rich economies, but it's a real rarity to not do stuff digitally. There's pros and cons to doing that. And
I mean, Optus went out for an hour, like a
Are you on
couple of
Optus?
hours, and no, I was glad to be a Telstra Maxi that day.
Same.
But I mean, Optus goes out for a couple of hours, and it was like, I think that people realized the kind of fragile nature of everything, and it is always that funny thing of like, oh, what happens to crypto? It's like, my guy, what happens to literally everything? Like,
exactly.
crypto is just a third order thing in that list. Like, it's probably one of the least essential things in that list of what happens when the internet goes down.
They talk to this irony, like why people hate crypto, and I get it when the people that have been promoting it have been the scammers, the con artists, when that's not everyone that promotes it. They're a minority, right? And
they're very loud minority.
They're very loud. Chainalysis shows us that illicit activity is, from what they can tell, it is such a small portion of what is publicly known in terms of the crypto hacks. And there's probably stuff that they know about that we don't know, and it goes into their numbers, and it's obviously not everything. So caveat there, but they show that, at least from as much as they can gather, that illicit activity, just like in the real world, money laundering is not everything. If we were going from a system of whatever it was handshakes before, and we go to this thing called money, and people go, well, look at all the scams that happened there. And then you show that, like UN reports from 2017 or whatever it was, 5% is maybe, good guess, is about 5% of GDP globally is money laundering, right? That's a small percentage there. But yet the whole thing gets painted with that brush. It's the same thing with crypto. It'll be the same thing with any new technology. It's new, it's different, I'm scared of it, don't do it, it's a crime.
Well, there is also the irony of using a public ledger that anyone can see online for illicit activity. It's like the cash is just a much better option. And I mean, it makes sense. You want to send money cross-border. If you want to do that in large sums, if you've got great OPSEC, then sure, you can use a mixer. There's reasons that you would use it, but it's like, the fact to say that the entire industry is that, and not just a bunch of nerds building financial tech on the internet and sinking lots of money into it for fun, and for their own self-interest. It's like, sorry, self-interest is the wrong way of putting it, but it's like, it's everyone's kind of mutual self-interest at play. I do think that the level of ire that crypto receives in terms of being used for criminal activity is completely unwarranted.
Agreed.
And over time, as agencies figure out how to look at it, it decreases over time as well, because people are like, shit, it's
Can't do that anymore.
Bitcoin is no longer this really complex thing that it's like, oh, well, the cops don't know what it is. It's like, they do. They're very aware.
Yeah. The
So no,
authorities
I
come to
mean,
these events, I've seen them and they present themselves. I'm not saying like that your local cop shop is going to be there, but people that work in, whether it's the government bodies that are regulating the space or the ones that are doing the enforcement side of things, whichever agency that might be, they are well aware and they come to the events like the major national kind of ones and conferences because they want to meet with people because we want to see good being done in the space. Like you have a nice sound economy running when there is protections for investors at the same time there is room and ample room for innovation. Like we definitely don't want to stifle things. And Australia's been a great test bed for a lot of innovation. But yeah, we have to have balance, right?
yeah. And this is the thing. I was actually speaking with, this is a couple of months ago, I was speaking with the Secret Service. Not sure if I should name the specific field office, but it was interesting. I was chatting with these guys that work in crypto enforcement for the Secret Service. So their main thing is scam protection. And these guys are degens, which I found really funny. Like they're super interested in it. And they were kind of like, there is this conflict between having money on the internet and then like the pros of that being that you now just have money on the internet. You don't have to deal with, third parties putting it in a bank. It's like I can just take it, move it around, do what I like. That appeals to some people, doesn't appeal to others. But again, there is that balance of there's a great side to it. And then there's also the fact that crypto kind of just opens up the surface area of scam potential. Because it's like, instead of having your, hey, send me an Apple gift card, kind of scam where you call someone up and you have to convince them to send you 1,000 Amazon gift cards for tax or however that plays out. You now have this scenario where it's like, okay, click 3 times and send me $10,000 of money that you will never see returned.
The one overnight, the DeFi overnight, $580,000 gone. And it was like, okay, so you're taught when you work at corporates or you just know from being a tech savvy kind of person or not even tech savvy, you're just aware of this. If the email address or the phone number that you're getting from ATO, having money for you, or the email address doesn't look like it's BlackRock, it's blackrock@gmail.com. Yeah, right. But this thing looked like it.
They've done some layoffs recently, they've let them run the Jeep.
Keeping it light. But, this thing overnight, you look at it, the header, it is, well, they didn't open up the header. So there was some ways that they did it. And I don't know the tech side of things. Someone else can explain that. But the sheer fact that this thing looks like it is coming from the DeFi, de.fi protocol. Looked like it. People clicked on it legitimately thinking it was a thing and then got scammed all that money. Now, here's the thing. I reckon that we can do something about that with the technology. And it goes back to from the ICO's days to the DAO's days and stuff, where we were not using blockchain tech for what it could be good for. Imagine if you had a promise of, you got to do sweat equity for me, Tom. You got to grind and hustle to be part of this DAO. You do all of that. And as soon as I get funded, I run away or I don't give you any money. However, you could have something with a pre-approved contract, smart contract, that says that as soon as this wallet gets paid via escrows, you're getting the money coming straight to you for all the work that you've done. The more work that you do, the more allocation you've got. Some fair system that cannot be tweaked, that cannot be just because I changed my mind and I was a good person before and now I'm bad. You can't do that. I think it's the same thing. We bring technology into things like, and I'm not sure exactly how this would work. I'd have to run the numbers with the devs like Arturo and stuff in my team. But imagine zero knowledge proofs, where the only way that this thing, even if it looks like it's a real email from BlackRock or DeFi, for example, when you click on it, the only way it can actually be coming from that person, that money, that wallet, is if it has something in the ZK proof that proves that, and it creates that handshake and it's a true false. So even if someone fakes it, it's going to produce false results and you're never going to get scammed that way. Now, obviously, light, very high level, but I think we should be trying to do things like that to protect ourselves. It's using the tech to protect our own industry, right? Otherwise, we get scrutiny from the outside. This is just another tick on the box of people from the outside going, see, told you so, you shouldn't be in that space.
Yeah. I remember speaking with Arturo, who was talking to me at a very high level about ZK proofs, and I just sat there going, hmm I understand, but it was good. He helped break some of it down, and I do think that ZK, zero knowledge proofs, are going to come back, not just on the crypto side of things. Like, I think that's a reasonable
Mm.
kind of assumption on my behalf to say that, zero knowledge tech will become gradually more popular over this
Hmm.
year, as people kind of realize its utility. So things like Binary Protocol, in
Yeah.
terms of like just shrinking the size of a blockchain in general, Loop Ring, and a couple of others that I've completely now forgotten. I would like to get because
Mm.
I'm not going to pretend to know what's going on with ZK proofs. I would love to get your knowledge
Hmm.
on what zero knowledge proofs are.
Yep.
Explain like I'm five, which for all
Cool.
intents and purposes on this conversation, I am.
Well, the good thing is that at Not Centralized, we act like we're 5-year-olds, even though we're in, multiples of that
I
age.
know. No.
I think that's why we love the crypto space, even though we're tech nerds. We're the banker wankers in a way that have come into the space, but we adopted because we have been that way. We've already been the kind of degens in our own industry. We've been different. We've wanted to rattle the cage and make things better for our fellow man and stuff. But just going back to it, like the way that we see things in all of crypto is just great, big, useful, better than what we had before tech solutions and zero knowledge proofs. If you just want to think about it from this really high level, and this is like, if anything, my role in the space is to act as a go-between the other directors, the big, brains that are out there, to explain things to the community in a better way to understand. So hopefully I don't butcher my own kind of ethos here, but I think that zero knowledge proofs, if you think about how you move data around in the current world, we see things like log files, or you send the data across. And with a zero knowledge proof, a real world scenario of that is that when you go to a nightclub and you show the bouncer your, if you're lucky enough to be
To still be
to
ID'd.
still be ID'd, like I'm older now, so I get it every now and then, and I count my lucky stars when I do. But I have to show my whole wallet. I have to show they can read it. And I remember back in the day when I used to go clubbing a lot more, maybe 5 years ago or so. But the girls, for example, that I'd be with, the bouncer would look over the ID a little bit longer, and it's like, what are you doing, man? Memorizing the address, memorizing the name, whatever you're doing, right? It just shouldn't. Okay, fine, do your thing, that's your game. But like, we shouldn't have to, just to be able to prove that you're over a certain age. All you should be able to show is your date of birth. Better yet, you should only be able to just say a true or false thing. So a zero knowledge proof is, if they, as the authority, ask a question, you can say yes or no based on the information that you've got in your data, your ID, your knowledge, whatever that is that your data is about, without actually having to move the data across, without actually having to send the data across. So zero knowledge proof is a way of proving without moving the data. Now, the interesting thing in crypto is that it's being used for roll-up. So you said shrinking, right? It's being used to group and aggregate a whole heap of accounting transactions in a way, doing it off-chain or on a side chain or whatever, that basically is done there. The aggregations that happen are grouping those transactions, so it's low cost because they're not charging for every single transaction that happens on the layer one, typically Ethereum. They're doing it in a batch. So it's a batch load, and that's the grouped up, the roll-ups that have been happening. That's great. That reduces costs. It moves the space forward. We need that for layer twos. There's pros and cons to everything. In a way, some people might not like that because they see that as being centralization. What we've discovered, though, is that um, when we were doing the RBA pilot, which was all about how do folks that are working in the space potentially utilize the CBDC, and big scary thing there, but just think government money if you don't already know about it, government digital money. But the thing is that with our protocol, we were doing stuff in a thing called Layer C, and it's got a digital escrows thing there called trade flows. So whatever industry you're in, I can see that you've got the money to pay me before I do the work. And in construction, it's really useful because tradies, a lot of them just don't do that. They do work and they don't know whether they're going to get paid or not. And worse yet, if they want to do digital escrows, lawyers, accountants, a whole heap of account setup, it's a costly thing to do in the Web 2 world. It's cents in blockchain, and we can just do it really programmatically. Now, we needed a stablecoin for that. We're still waiting on an Aussie dollar stablecoin that is mainstream to be able to do that, because people here don't want to deal with USDC necessarily yet. But take that aside, what we saw with the CBDC was that we could bring that across here and have the CBDC as a proof of reserve. We trust the government in terms of treasury bonds and yields. In terms of investing, that is the most trustworthy asset. Fixed income, treasury yields, right? So if it's a promise from the government, and we've got a good one here in Australia, that would act as a really good proof of reserve to make sure that that stablecoin from NAB, ANZ, CBA, Westpac is actually worth the $1 it says it is, right? So we had the CBDC that way. Zero knowledge proofs came in because get this, you said it before, blockchains are transparent. Now, what business is going to want to do things, or criminal, or, it's criminals before, but businesses, how are business?
Who wants to store their data on their personal private data on a public blockchain? It's like, here's my address, money. Yeah.
It's not going to work. The contracts. Imagine you go to a cafe, and as soon as you've done a transaction, I can click on the wallet and see their address and see that, they spent this. These are all the transactions going in and out. It does not work. Commercially, there's no confidentiality. Now, here's the other way. Zero knowledge proofs can be brought in to obfuscate things that only the people that are part of the transaction, let's say you and I, we can see the amounts and details that we need to. Anyone else would just see that, there's a valid transaction on Ethereum. And I say Ethereum because we did this. The CBDC pilot was using a private fork of Ethereum for testing purposes, but we built a ZK proof that is EVM compatible. And that's important because we're not relying on, going off chain to do the roll ups and all that kind of stuff, to do the accounting transactions or even the proofs like we're doing. We're doing it on chain because we worked out how ZKs work, and unfortunately it wasn't really great documentation. So there was a lot of effort that went into this. And so what ended up happening was that we built this thing that is got the digital escrows. Here is the ZK proof that's on top, so that if you're a business doing something with this, it doesn't have to be construction. It could be anything where you use this kind of protocol. You have the confidentiality there, and it can sit on a layer 2 because we put it on Base, for example, which is EVM compatible. We've done it on, a non blockchain. We did it on DLT, which is Hedera. They were our partners for the pilot, and we've done it on Ethereum. So there's your base layer 1 Ethereum, there's your layer 2 Ethereum, and there's something that's not Ethereum that is EVM compatible, and you can do all these things there. The beauty of all of this, the reason why we can do it and do it so fast, was because this is open source. This is a place where if you're a dev, you've got great ideas, and you persist, you can create some really interesting things. The rollout now is trying to get corporates and business and banks and financial institutions to start to adopt these things. And big places take time to change. It's going to happen. So we park ourselves on the side where we know we're going to be in that area where as soon as something, maybe whether catastrophic or positive, happens, they want to bring you in to do this kind of stuff. We're having some really great conversations, but it's trickling along. It's when you compare what's going on in blockchain, the positives that are going to be coming there from going mainstream, like having the Bitcoin ETF, it far is outweighed at the moment, at least in the news and in terms of movement, by what AI is doing. But I think that, we need to keep pushing on both.
Yeah. Okay. So would you say the future, I'm not going to push you into that.
No.
I was interested, do you think the future is EVM compatible or EVM dominated in the sense of you build on it?
Yeah.
I'm seeing lots of different people trying to claim that new certain blockchains that are faster, better, more monolithic. And I'm not just talking about Solana or stuff, but there's new ones like Say. So many have popped up in the last month or two now that ETH BTC is going down. Everyone's like, it's happening. So from your perspective, do you think the future is very much, and for those listening and not sure, Ethereum EVM just means Ethereum virtual machine, which I'm sure you can explain better than I can.
Solidity. You're writing in Solidity code, which is the most common thing for blockchain. So is your question, will it be a Solidity type thing, or are we going to see other programming languages?
I think it was more of do you think the future of blockchain is EVM compatible?
Yeah, I definitely think it is. If we just think of the best, I say best, I'm going to piss off, people from Solana and Polygon.
That's all right. Everyone's mad all the time. This is fine.
When I say best, I just mean that more people are building on it. And look, maybe that changed. Maybe there's a metric out there, and like, oh, Mark said this, and there's more users on this. Whatever. I think that
I'll make sure to clip it and be like,
yeah,
ha, no.
exactly. That'll be my clip. I did an Andrew Tate clip where he's crying on Piers Morgan, or he says that he's crying, not crying, and whatever. Check out my Twitter, folks. Make that go famous. But
where can people find your Twitter, Mark? That's a good point.
Twitter.com CAPT DeFi, Capta DeFi. Although I'm going through an existential crisis there because I do a lot of AI stuff as well. So I need to go through a name change or something. I do believe in DeFi still, but I've always been a centralist. People think, oh, you're DeFi, so everything must be, completely decentralized. It's like, bro, how do you get loans? How do you get any kind of credit creation for personal home or whatever business loans? You need some sort of centralization. I'm much more in the middle. But going back to it, what the hell were we talking about? It was Twitter.
EVM compatibility.
It's going to be...
Trust me, I'm the most ADHD person alive, so don't worry about it. We're fine.
We should have an ADHD podcast where we just look at shiny objects and just click around the internet and somehow have a topic there. But no, I think it is going to be EVM compatible. But the reason I asked about the programming languages is I have seen these things where people push out this is a better programming language than Solidity because it is much friendlier for people that are new to the space, that are programmers that have just come in, and they can just write in JavaScript, they can write in their own language. Now, ironically, a lot of the people that started in blockchain, they had to learn how things work. They had to learn about gas fees because that's not something you typically deal with when you've got fees for APIs, but it's a little bit different because things are fluctuating when it comes to gas fees and handling that for businesses. It's just a newer thing to take into account. But at the end of the day, it's still a programming language. There's still rules and ways of doing things. It's still pretty easy to learn. And even if there are better, because academically better, technologically better, faster, better, harder, stronger, whatever Daft Punk says, I think the problem is going to be take up. And given that the majority of things being built and created have been EVM, but a long time ago, Java was one of the best languages out there, and that's moved on to JavaScript, which is different, even though it sounds the same. And you see things like C++ and C# and Python and R and all of these things that do programming or analytics or data science that have been, you see those racing bar charts. Have you seen those animations? It's the most popular thing for each year, and as the year changes,
and then it goes.
They did something for they did something not for crypto, but they did something for programming languages. And you see over time that what was best and most popular 20 years ago, so just like what was best now, EVM may change in future, but at least at the moment, for the immediate future, it's still going to be the one. It's still an EVM future that I see. Just hopefully they address some of the bugs, the cons of it. That most will build on that, or they'll build a side chain, or they'll build a layer 2, but to get something to a layer 1, building layer 1s is a difficult game as it is. You have to really have good marketing to get things out there and have really good use cases. It will be hard. It's possible, and we need that. We need to have the competition there. It can't just be that they're the one king and everyone lets it happen on them. Otherwise, they'll get lazy. You keep everyone on their toes. But for now, really long roundabout way of saying it, it is EVM for me.
Okay. That ties into my next thing that I wanted to ask you.
Yeah, go ahead.
And so a big point of this podcast is very much to kind of demystify a little bit around the tech, a little bit around what crypto is, but also just a little bit around crypto investing as well, as to what kind of assets people like. Again, I'm not asking you to tell people to go buy anything, but it's and I think I've come up with a reasonable way of asking this. But if you had to kind of start from scratch again today, you've only got fiat money sitting in your account. You've got the same amount that you do.
Yeah.
So you've only got disgusting fiat money in your account with all the knowledge that you have now.
This kind of stuff.
Hong Kong. Is that a euro? Is that a euro?
Hong Kong dollars.
Oh, Hong Kong. I can only see a little bit in the cam.
I'm
nice.
Heading back to Asia. So just looking at what dollars I've got left over from different countries. Anyway. Yeah, so going back, if I had to start over.
Yeah. If you had to start over with the knowledge you have now, only fiat, how would you design your crypto portfolio? How would you weigh it? What kind of things would you put in there?
I feel like there needs to be some sort of app which is like OnlyFans, but it's only fiat. and it's just people doing things with they're doing this kind of stuff. What I would do is, look, I'm lucky that I've come from a background like I started out as an accountant, realized that I wasn't good at doing audit, or it just wasn't cut for me. I wanted to do things a certain way, didn't really bode well with the work and stuff. And I went into analyst work. I love numbers. I was really good at that. And from going into that space, what was really interesting and learning how to use tools and bringing up my statistics kind of background from uni, I was able to get into research analysis at investment banks. And being in that space as an equity analyst, looking at macroeconomic trends and being a bit of a quasi-economist, I got to see working with traders on trading floors. So proper, massive screens, or like large numbers of screens, a lot of Bloomberg and other stuff going on there, a lot of shouting, a lot of like phone calls, a lot of like client meetings. You see what works and what does not in a really professional setting. Now, I'm not saying that retail is dumb money, but we don't have the kind of information. There's definitely an asymmetry where one side has a lot more information than the other. And even though the world is, moving forward, there is always going to be the side that has money will have more information. But what you learn from there is core tenets that are still holding true, no matter whether you're on the sophisticated investor side or the dumb money side, like I'm in now and stuff. But you are in this space where diversification is key. Right, you don't want to put all your eggs in one basket. Those things that are like, whether it's your grandma saying it, or like it's an old wives' tale, or it's like a thing that is just passed down, it's still very true. Whether it's investments or investment of time, money, or resources, diversification is key. You don't want to put everything in one basket. And even if you do, and some people argue for this, and I get it, it's because you've done enough of the research to know that that is the one bet. If you're going to have to bet on something or two things, I'm going to put all my money in those.
Diversification kind of guys that are like, no,
yeah,
all in on one. So, like, if you know everything about it,
hard to argue with, right? But the problem is that a lot of people, and we spoke about equity mates and stuff before this, and they're a great space for anyone to just look at traditional kind of investing. I've been on
fantastic.
I've been on their show, right? They're lovely guys here in Sydney and stuff. And they've got great, other podcasts, and I love what you're doing here. So, I can see you getting on their radar. But the thing is that they talk about it, whether it's in the forums or on the shows with the professionals that they bring onto the show, or, I was doing a lot of data analysis for ETFs. And I don't do that anymore, but I was tracking Bitcoin ETFs. I've got an app online that, people care to look at it. It needs to go through an overhaul, etftracker.com.au, Aussie ETF, so no Bitcoin ones there. But going through the analysis on their show, and being in that space, diversification is always up there, as well as risk management. You diversify because here's the thing: a lot of people got rich, but don't know how they got rich. They will say that, I knew to buy that NFT. I knew to buy Doge. I knew to buy. Man, you had no idea that Elon was going to do that tweet.
That's hindsight bias. It's so much of it. Of like, it went up a lot, so I was correct in buying it. It's like,
exactly. The problem with that is that so there's a saying: if you're right for the wrong reasons, you are much worse off. So if you're right, but your thesis, your system of looking at things was wrong, it's actually doubly worse, because you will end up potentially doubling down, or you will do other bets in future thinking that you were right, when it could actually be much worse. And it's worse if you actually double up and put more money into it, but your thesis was wrong. You want to be like very careful with things. So risk
you've got falsely validated confidence.
Exactly.
It's like you have no reason to be confident, but off you go.
If you're wrong, but you're wrong in a diversified way, so you don't lose as much, you have stop losses and all that. And if you're wrong, but apart from like not losing much, but you're wrong for the right reasons, that is better. And sticking to a system that, you've back tested and you've proven over time, or you've listened. Maybe you don't have time for testing, but you just have a core belief in listening to the experts that are giving the financial advice. And this is definitely not financial advice, but like the ones that where you are long-term investing and seeing something rise over time, like people getting out as soon as something dipped, and versus those that had the longer term view. and are seeing the returns back to where we were with Bitcoin and other coins and stuff 2 years ago or so. And I know it's dipped now, but we've seen those returns. So risk management is really key, and I would say other things like knowing the tools. If I could change anything, there's more knowledge of the tools that are out there that really help. So newsletters and reading those, and if you haven't got enough time, get ChatGPT or get our tool and like throw everything in there and like do your analysis that way. But like definitely whether it's reading, listening, or watching, there's easier ways to consume a lot more information in a compressed fashion to get the insights out of it. So it's the tools, it's that research thing you can do a lot more of now, and just things like just being part of communities and going to events and talking to other people rather than being in your own kind of silo where you're in that echo chamber that's not challenging your own ideas. I would do this if I were people. Like if you're going to use ChatGPT, tell it about your investment kind of thesis and get it to challenge it, because it is going to do it from the collective mindset of all the other humans that have come before. Even if it knew nothing about crypto, it would know about, well, it knows knowledge up to 2023, so it'll know about FTX now. But it will use the core fundamental philosophies and truths about investing that have been true all the way back to the ancient Roman times. Like they had diversification, they had things like this. The utility is what you want to invest in, things like that, and being able to understand how systems work. And if something's good, is it good for the supply chain? Does it have like headwinds that are going to come because one of their competitors is creating something here? Like back then, it might have been that the first people to create concrete, Roman concrete, had competitors, and it's like, oh, there's Greek concrete or whatever it was. Back then we had systems. Back then, information just did not travel as fast. But we certainly should not downplay that. Historically, people have been as smart as we are now. They just had different systems and technologies in place. So we might look at them as being, dumb, but it's just the information they had at the time. We should not think about that way, because in 100 years' time, people will look at us as idiots for, oh my God,
for sure,
you ate food that had that stuff in it. It's like, we knew what we knew at the time.
We look back on cigarettes and go, the idiots, just like we're going to look back at maybe half the things that we're doing right now, just on plastics.
On our epitaphs and stuff on the vaping, phones, they're just like, I tried.
I attempted. I came up short.
Yeah, exactly.
No. I mean, we're getting a tiny bit close to time now, but one of the final questions I did want to ask was to do with, you don't have to answer exactly what assets, but it's like, what kind of, if you had to bet on things that are going to be here in 5 to 10 years time in terms of crypto assets, what would they be?
It's going to be the mainly used chains. I see a lot of other kind of projects. When people look at crypto, the various coins, anything outside the top 10 or whatever, a lot of these are investments just like you would normally invest in penny stocks, like the Jordan Belfort, Wolf of Wall Street type penny stocks that he was pushing, things that are listed yet have yet to be proven in terms of value, utility. They're going for fractions of a cent. And here in crypto, that same kind of project that now is decentralized is like $2, $5, whatever it is, and pumping people's bags and stuff like that. You're doing the same thing, folks, that Jordan and his crew were doing. It just wasn't regulated. Wait till regulation comes in, and it's a harder thing to do that, making money off your fellow man. Like, look, this is not to get philosophical and stuff, but I just find it discomforting when people have made money knowing, you might not have known, but knowingly that others have been losing when you've been making it. No, it's not a zero-sum game, but there are some people that probably did that without thought or regard. But going back to it, crypto, where it's heading and stuff, I see a lot of those things being flushed out, but it's like startups. We're not going to stop doing that. We should always have new ideas, but we should try to have that delivery mechanism of utility. It's just that when it's the hype phase, you don't have to show as much. You can have an idea on a napkin and probably get invested. Then as it matures and things kind of wind down, better PowerPoints.
In a bull market, you might not even need a napkin. You could just walk in and be like,
that's it.
Token.
You shout out token in a restaurant in Silicon Valley where Andreessen and Horowitz and all the other VCs are. But, matures, you need a better PowerPoint. You need some other investors. You need to show traction. But in any case, the point is that things that will still be there, because I think we'll always have those startups and projects around. But I think the things that will just remain there are the infrastructure, the major platforms, layer ones and layer twos. Bitcoin will be there. Where one of our things that we've got coming up, an online event for the Oz DeFi Association, connecting all the cities, where the major presentation is going to be folks doing DeFi on Bitcoin. They'll talk about rootstock. They'll talk about ordinals. They'll talk about these cool things. And, the fact that we've got this Bitcoin ETF, it's unlocking like what a lot of institutions are looking at with what else you can do on Bitcoin as well as retail people. But we're going to see Bitcoin, Ethereum. I think other things are infrastructure. So Chainlink, I'm a strong believer in. There's some great folks like in Adelaide, Verida, that are doing things, Filecoin that are doing things in terms of storage and security. There's all these great kind of projects out there. People doing stuff in ESG, like our friends at Sensan. I mean, I could just name the sponsors because they're all great. Like Stables doing their cross-border remittance, and Blockdaemon, and what do you call it? Fire.
I've met the guys from Stables. They're
great.
Fantastic. They're building a good product.
And then there's
I'm excited to see where that goes.
Cloud Tech, for example. They're building a wallet through their Cloud Tech X platform, and they're trying to do more in the banking space to bring this decentralized technology to more of the mainstream. I see these things that are getting and building infrastructure or usefulness in the mainstream and doing it in regulated ways. That is where things are going to be longer lasting, because you've got less chance of people going to jail. You've got the better tokenomic system. And when I say that, I mean the tokenomics where you literally clip a fee because you're providing a good service. The best kind of tokenomics is something where there's a good service or product and you're clipping a percentage fee on that. That's a traditional business model. That's not really tokenomics, but that is the best kind that I think is going to happen. And it's the ones that are like that will be long lasting. It's just business. The others, there will be startups, there will be speculation, there'll be the fun times. We should always have the vibe. We should always have the art there. But, it's like saying that in high school, for example, that everything is like art and, you're going to speculate on all this art stuff. Like NFTs are good for the art stuff, but NFTs can also do a lot of things in terms of what they represent as like a smart contract type structure for contracts and for, we're using NFTs in our protocols for doing like the digital escrows. There's an NFT is part of that, right? But I just think that, more utilization of the technology is really the core thing and principle that needs to be held.
Mate, I think that's a fantastic place to wrap up.
Thank you.
Mate, thank you so much for coming on the show. Where can people find you?
Mate, it will be on Twitter, so Cap DeFi. You can look me up on LinkedIn, Mark Monfort, and you can look up Not Centralized. It's centralized with an S, or the Oz DeFi Association, all of those things. And no doubt when you push this out, I will push the message out about this and share it with my community too.
Beautiful. Thank you very much.
Thank you.
All right, mate. Thank you so much for coming on. Really appreciate it. Thanks so much for tuning in to today's show. If you enjoyed the discussion that I had with Mark, make sure to like and subscribe and all that kind of stuff. But this is a brand new podcast, and every little bit of support really, really helps me out, especially in the early stages. I record this around a full-time job, and I'm doing my best to make sure that there's an episode up every single week. At the moment, it's largely centered around people within the crypto industry talking about tech, emerging narratives, all that kind of stuff. But as time goes on, I'm planning on introducing some more Crypto 101 series that break down investing in crypto in a simple, methodical way. A lot of people still approach crypto like it's gambling. And while there is a lot of that in crypto, it's, I think, really important to remember that it's just a market like any other. So keep an eye out for the Crypto 101 series. I'll be releasing it here on YouTube, as well as audio-only versions on Spotify and on Apple Podcasts. That's where I'll break down I'm planning on having the top 20 tokens by market cap, just doing a really brief run through of each asset and essentially approaching it as you would investing in a company, or as near to that as I can get, without verging into full TradFi simpness. So keep your eyes peeled for that one, and I'll see you in the next show.